everyone, and welcome to this Your Overseas Home webinar. My name is Roseanne Bradley. I'm a senior writer at Your Overseas Home. Today we'll be chatting with Danny Cook, a trader from Smart Currency Exchange, about foreign exchange for those buying property overseas. So Danny, it's great to have you with us today. Before we get started, can you introduce yourself to our listeners and tell us a little bit about Smart Currency?
Yeah, absolutely. Good afternoon, everyone. My name's Danny Cook. I work as a trader here at Smart Currency Exchange. So I've been here for around 4 years now, helping clients to manage the currency risk that they're exposed to when buying property overseas. So today, just going to take you through a short presentation about 5 key things a currency expert can help you with when buying overseas. And then we're going to go into a Q&A session at the end for all of you to ask some questions.
Fabulous, thanks so much. Okay, so Danny does have a presentation to share. Once he's finished, we will open the floor up to questions. Should you have any as we go along, do please type them in the right-hand side of your screen and we'll get to them at the end. So I'll hand it over to you, Danny.
Yeah, perfect. Thanks, Rosie. So first, you just want to really kick off with a bit of information about Smart Currency, really. Here you can see some of the stats that we've got on the board here. So we've been around since 2004, helping clients manage currency risk. As I said at the top, I've worked here for around 4 years now. Majority of my clients are property buyers like yourselves. So at the start of the journey, there's 5 key things you need to be aware of, which we'll go into later in the presentation. But yeah, here are just some stats about us, really. You can see more than £12 billion transferred since 2004, over 45 clients helped, over 600,000 transactions managed, and we are rated excellent on Trustpilot. We've got around 1,800 5-star reviews there, I believe, at this point, of people who've used our service in the past and been very happy with the experience. UK-based team with a head office in London. We do also have offices in Spain as well. So we do have a presence over there. For anyone who's going to be out there on any trips or anything like that, feel free to pop in. We do have 2 offices over in Spain as well. So just want to kick off really by looking at sort of what we've seen so far this year. A high amount of volatility. We've seen a low of 111, which was back in February. That's where the exchange rate is the lowest point. You can see here on the graph that it has slightly moved up since then. We saw a high of just under 118 around August time. So 7% difference between the highest and lowest rates of this year. And of course, this creates a lot of challenges when you're buying a property overseas. Currency markets constantly moving around, constantly changing based on different political events, different events happening all over the world that really, change the currency rates. And ultimately, when you're buying a property overseas in a different currency, this does pose a lot of challenges. Now, I would say we're currently, if you look at the graph, on a slight downward trend. You can see there's been a slight recovery over the past sort of few weeks for the pound, but it has dropped off its sort of previous high point. Who knows where we're going to go from here? I'd say you're still in a top 2 percentile range of rates achievable this year, so still not looking in a bad position at all, really, when you look at it like that. But potentially, more downside risk and upside potential of what we're seeing at the moment, just given the fact it has dropped down. Risks, definitely still there to be had overall, and we'll go on to just have a look as well about sort of what's influencing these markets at the moment and what you need to be aware of when looking at to buy a property overseas in a different currency, most likely in the euro for most of you. So the key influences so far in 2023, we had Jeremy Hunt's budget at the start of the year. That brought a bit more stability after the tragic mini budget of Liz Truss and Kwarteng towards the end of last year, where we saw actually markets drop to a very, very low point around sort of 107. So some of you may have seen that in the news. It was very, almost countrywide news how low the pound was after that decision. It really did create a lot of problems for the UK's currency. Inflation, of course, always a big factor when looking at currency rates. It was rising at the start of the year, but it has started to level out and actually come down now. So that's obviously much better to see, really, for the currency. It has made a bit more stability with the exchange rate when inflation's coming down. Interest rate changes. Now, these are often the most sort of major points to look out for when you're sort of trying to track where a currency is going to go. So we saw Bank of England currently with 5.25% as their base rate, and the European Central Bank at 4%. Now, interest rate hikes and when interest rates are lowered, that's really going to see where you see a lot of change in the currency rate. For example, after the last one of the Bank of England, when they actually maintained the rates, it was a very, very close vote. I believe it was 4-3 or something very, very close, which meant that the Bank of England decided to maintain their interest rate, which as a result dropped the pound down slightly. Key dates coming up, we've got 26th of October is the next decision for the European Central Bank, where they will decide what they're going to do with interest rates moving forward. And then again, Bank of England interest rate decision on the 2nd of November. Both of those dates will be key to look out from the calendar if you're already tracking the currency rates and trying to see where they're going, because both of those decisions, as I say, will have a big bearing on what they're going to look like moving forward and depend on where investors and the major banks sort of see a currency's strength. I've also put there the Israel-Gaza conflict, quite a new bit of news. As more news comes out about that, who knows what's going to happen. You could well see some impact there on the markets as well. As I say, these major sorts of world events do often have a bearing on where currencies are going to move moving forward. So got to keep an eye on the news as well for what happens there moving forwards, and if that's going to have a bearing on how currencies move in the future. So coming to the crux of it then, 5 key things we can help you with in relation to what I've discussed there and how volatile markets have been this year and how volatile they will likely be moving forward. So the first thing we really aim to do, first and foremost, is help you to understand your budget. So you need to ensure you have a trusted currency expert who has dealt with thousands of property transactions before to give you guidance on your purchase. Now, we are very, very well established in this space, as I say, coming up to 20 years of experience now for helping people who are buying property overseas. So the first thing you really need to do, I would say, before going on viewing trips and whatnot, is to really understand how these movements are going to impact your budgets and buying a property overseas. When you're talking about a small amount for a holiday, a change in the exchange rate is really not going to make a massive impact. But when you're starting to look at a vast sum of money, such as buying a property for, up to however much you're buying for, 500,000, it depends, even 100,000, it's going to have a massive impact on your budgets, these changes in the currency rate. So understanding your budget first and foremost is the most important thing to do, and how these changes are going to impact your budgets. Understanding currency risk. So again, 2023, there's a little error there, but 7% from the 7% change we've seen in the rates so far. Exchange rates are highly unpredictable and highly likely to have moved between when you pay a deposit to when you pay the balance. So you can be in a position where you've found a property, you pay the deposit, that's great. You can think, right, this currently costing me, this 300,000 euro property might be currently costing me X amount in pounds. When you come to pay for the property, 2-3 months down the line, the cost in pounds could have changed dramatically to the point where, depending on your finances and budgets, you might not be able to afford the property anymore, depending on what funding you've got in place. So there are great risks that these currency markets can pose to you. So it's important to understand that risk and then devise a plan moving forward to manage that in the most effective way possible. Third main thing we can help with is something called a forward contract. So it might be something that some of you have heard of before. It might be something that some of you haven't heard of before. But a forward contract is probably the most powerful tool we have to manage currency risk. The clients I work with, I'd say probably around sort of 70% end up going down this route. It's the most popular method for property purchase because it really allows you to have absolute certainty over your budgets. You can then focus on the other complexities of the property purchase process, like dealing with the lawyers and the counterparty and whatnot, and not having to think of the currency exchange movements as an added worry in that process. That process is complex enough without then having currency exchange to worry about and worrying about it potentially affecting the cost for buying your property. So a forward contract is a really powerful tool, allows you to lock in the exchange rate for transfers made up to 24 months in the future. As a customer, your bank will not provide this product, so it's something you can only do through a broker such as ourselves. Market orders, otherwise known as order to buy or OTB. But this is more for clients who actually want to gamble on the markets now. Spoken a lot about risk here, which is something we are very keen to manage for our clients. But ultimately, some of you might not be quite that way imposed when it comes to your finances, which is fine. Everyone's different. So market orders are more for those people who want to speculate and gamble on the rates. So when the market hits the rate you've budgeted for, we'll exchange your currency for you. So for example, now, rates just on the 116, you might actually say, yeah, I'm a very optimistic person. I think the rate's going to get to 118. We can set a market order for you at that rate. And then if and when the market hits that level, we would trigger and buy the currency for you automatically. That order runs live 24/7 on the market. So it can trigger even when you and your personal trader, might be in bed, might even have the time to get on the phone to each other to actually place a transaction. Market order, place that on the market, and then you're guaranteed to get your desired rate if and when it becomes achievable. always like to stress with my clients, if they want to go down the order route, that they fully understand the risk they're sort of entering into if they do decide to go down the order route. If they don't have the funds to account for a potential, 3-5% drop in the markets between offer acceptance and completion, then I, probably be not really advising them to go down that route, and potentially to look at, a forward contract instead. You want to be very careful with how you sort of approach these things in terms of how your budgets are. And that goes back to number one, is understanding your budget before you decide what route you're going to go down. And then regular payment plan, otherwise known as RPP. So this is more so for once you're done with the main requirement of the property purchase. You then speak to your personal trader afterwards, your account manager, and say, I need to get some regular transfers set up now. I've bought my property. I need some money for living costs. I need some money for mortgage payments, pension payments, whatever it might be. And you can have the same amount sent each month without having to book or pay for individual transfers. The whole process is automated. You simply set up a standing order with your bank to us. We get your bank details on file, of course, potentially even from the initial transaction. And then it's simply, the whole process goes through automatically, and you don't even have to do anything each month. The funds will simply land in your Spanish, French, Portuguese account, whatever it is, once it's set up. And as I say, no sort of stress for you in terms of or admin having to call up and make those transactions. It's fully automated. So turning rates into real life, this is a scenario setting for property buyers applying at 2022 interbank exchange rates. So March 2022, Jason and Carly decided to buy a small villa for 300,000 euros on the Costa Blanca. At this stage, the total cost of the property was £250,863. May 22, 2 months later, they found the property they love. They pay a 10% deposit to take the property off the market. Rates have slipped slightly, so the exchange rates come down. Cost has increased to £254,972. So we've seen a drop in the rates. The cost of their property has increased by around £5,000. September 2022. So they're actually now at the point of paying the balance. They need to transfer the remaining €270,000 to complete the paperwork, and the property is now costing them £263,227. So a drop in the markets. The rate has slowly been moving against them. Unfortunately, in not using a forward contract, Jason and Carly had no idea what the rate was going to be on the day to completion. The properties cost them an extra £12,364. Why take that gamble? If we'd spoken to them early in the process, got an idea of their budgets, understood what risks they want to take, if they are risk takers, that's their decision. But ultimately, if they're not, we would have got a forward contract locked in there, and then this would have all been avoidable, and they would have been able to purchase their property happily. So 5 steps with us: reduce the risks and enjoy the certainty. So step 1 there is to speak to an expert. Get yourself signed up for a free non-committal account. You can get straight through to a currency expert, myself or one of my colleagues on the desk. We'll have a conversation with you, all totally non-committal in the early stages, as I say. We'll understand your budget. You'll get an agreed currency plan, and the 4th step is simply to execute that currency plan and secure your exchange rate. So it's a very, very simple process. Of course, this process can take place over a number of months. We'll probably have, several conversations to actually fully go into detail on each of these points. Every single client is going to be different. So I'm sure everyone has different requirements, risk appetites. Will have a different thought process on which route they want to go down, which option they want to take up. But in every situation, we can help you, whether it's, market orders, forward contracts, just simple one-off transactions. We're here to help and just make sure that you're getting the best service possible in relation to that as well. And step 5 is simply to enjoy your new home. And that's it for the presentation. I know we're going to have some Q&As, some questions and answers, I believe. But yeah, I think there's a QR code here that Rosie might want to explain a bit about as well. And there's my details there as well, and our email addresses.
Yeah, of course. Thanks so much, Danny. So there's Danny's email address just there if you wanted to get in touch. Alternatively, you can scan the QR code using the camera on your phone, and that's to book a conversation with a currency expert like Danny. Okay, so we have got some time for questions now. Rosemary's asking, if we draw down funds from an offshore account, must we put it into our bank account first before transferring it to Smart Currency, or can we draw it directly into our account at Smart?
Yeah, I would probably recommend firstly that you have the funds in a personal bank account with your name on it. So I'd probably recommend moving it to that first, simply because from a compliance basis for us, sometimes offshore accounts can require extra documents. So I'd probably recommend to do it that way. Ultimately, we can occasionally take funds from offshore accounts, such as Jersey, places like that, but we do need extra documentation for that. So it depends really if you're happy to provide that documentation. Most of my clients are, but yeah, it's certainly something we could still do. Just depends on the situation really with regards to your documentation, what you've got available, of course.
Okay, great. William's asking, can you pay a UK-based owner in pounds, negating exchange rates? I think this one came in around when you were talking about regular payment plans.
So yeah, I mean, if you're paying someone in pounds, of course, that wouldn't be something that we would assist with, because we're held to help purely with currency exchanges. So if you are paying someone in pounds, we wouldn't be able to assist with that from an FCA standpoint as well. So we wouldn't be able to assist if you're doing a pound-to-pound transfer. It's only pound-euro if there's an actual currency exchange involved that we would assist with.
Okay. Rosemary's also asked, if we have a forward contract with Smart, who gets the interest from the money while it's with you?
So in terms of how the interest works with a forward contract, we don't gain anything from the interest rates. It's different for different currency pairings. So for example, on a sterling euro exchange, your exchange rate would be slightly lower than on a spot contract, because you're booking the contract forward. So you have to get quite technical there. You have to take into account a concept called forward points, which is basically the interest rate differential between the two currency. But we don't gain anything from that. The only way we make money as a business is purely in the difference between where we buy and sell the currency at. So it's purely in the exchange rate margin on the day an exchange is booked in. So the interest thereafter, we don't make money from that.
Okay, fine. Thank you. Ashling is asking, on the wrong question. Do you have to pay currency transfer if you were transferring money from Ireland to France, therefore in the same currency, so like euros to euros?
No, you wouldn't know, because you're doing the same currency transfer, so that would just be a straight transfer.
Okay.
Yeah, so you wouldn't have to. Yeah. No.
James is asking.
Might be some bank charges, but no actual currency exchange charges. Yeah.
Okay, fab. I've never had that question before. It really struck me. Okay, James is asking, how much does it cost to set up a forward contract?
Yeah, so again, in terms of the mechanics involved, the cost is purely in the exchange rate spread. So again, we only make money as a business from where we buy and sell the currency. That's the only way we keep the lights on. There's a slight margin from where we buy and where we sell at. So it'd be quite clear to you on the day if you track the exchange rate online, say for example, on Google, that's never the rate you'll get as an individual. I think there's a slide where I mentioned interbank exchange rates. So the only people getting that rate are sort of the major banks when they're doing trillions between themselves at a time. So we buy slightly below that rate, the rate we sell it on to clients. As I say, that's our income as a business. In terms of the forward contract, the mechanics involved, you actually pay 10% of the total sterling cost upfront to secure the rope. So say if 300,000 euros were costing you £270,000, pay £27,000 within 3 working days to lock a forward contract in. And then the rest of it, so the final 90%, you pay over any time between that and whatever valid date we set on the contract, which, as we say, can be up to 24 months in advance. But we would set a valid date in line with your actual specific time frame. So whether you say if you'd have an offer accepted now and you're completing end of January, we'd probably set your forward contract to be very, very similar to those dates, so that's all married up. But yeah, so 10% of the total sterling cost up front, but that's not a cost. That's included in your total GBP amount. The only cost to you as a client is in the exchange rate margin. That's the only fee as such, but every transfer is totally fee-free. It's purely just that exchange rate margin.
Perfect. You can get a free quote today. As we just said, you can just scan the QR code and someone, Danny or one of his team members, will get back to you. Okay. Jutta, I hope I've said that right, is asking, do you exchange Canadian dollars to euros?
Yep, absolutely. Yeah, we definitely do that. I had a client actually just a few weeks ago who booked a Canadian dollar to euro forward contract for a purchase. So that's definitely something we can assist with.
Okay, fab. David's asking, is smart currency exchange regulated by the FCA?
We are correct. Yeah, fully authorized by the FCA. So yeah, there's a lot of I suppose, things that entailed, which I won't go into detail now because it would take me a few minutes to explain, but yes, we are.
And for anyone who doesn't know, what does FCA stand for?
Financial Conduct Authority.
Okay.
Yeah.
Okay, Trevor is asking this. I think he's followed up, so give me a second.
No worries.
Can you cancel a forward contract once it's set up? And can you change the maturity date of a forward contract? I think for context, he's buying a new build property, so the completion dates can kind of move.
Mm-hmm. Yeah, absolutely. So that's something you can do. You know, the contracts are flexible. You can have them extended. You can cancel them as well. You'd have to have a conversation with your trader at the time about the exchange rate on the contract as and when doing that, because of course, you know, the market can change, and that can change the valuations, of course. So, but yeah, you can extend the forward contract. Say if you've got one in place and you're actually struggling to get the funds to pay for it by, you can extend that and give yourself a new value date. Again, it will depend on the currency pairing as to what happens with the exchange rate on the contract at that stage, but it's certainly something you can do. And again, you can have them cancelled as well. But it's always definitely worth speaking to your trader about those mechanics as and when. And they say every contract's going to be different, but those are definitely, you know, mechanics involved within something you can do.
Mm-hmm. And that's something that you could, you know, just give you a ring and say, hey, it's looking like it's got to be a bit longer, and that would be fine.
Yeah, absolutely. You know, you'd have to just call your account manager and explain the situation. And we'll always, excuse me, you know, work with a client to either keep the contract in place or, you know, talk about certain things that are possible. So just be a case of speaking to your account manager at that stage.
Oh, sorry about that. I'm not sure what's going on.
Presentation's gone.
Yeah, let's make us all the same size. There we go. Okay, Jason's asking, it's a good question. Are there any issues with some solicitors in France not accepting transfers from smart currency because you're not a bank?
No, generally that's not a problem at all. If, you know, a bank ever has a problem, we can generate the certain documents needed to you know, prove where funds have come from or anything like that. So it's generally not a problem at all.
Okay, fab. Let's just have a look at our questions. And can you tell us what a spot contract is? I know we covered forward contracts, but what does that entail?
Yeah, so spot contract's slightly different to a forward contract. With a spot contract, you're simply booking the exchange rate on that day for delivery within 3 working days. So it's a lot different to a forward contract where, you know, you're booking it for a date in the future. With a spot contract, it's simply you book the rate there and then you owe the full amount of sterling within 3 working days. And then we send the euros out upon receipt of that sterling, basically.
Okay, fab.
Sorry, voice is getting a bit.
Okay, Ken is asking, he's already bought his home and is presently remodeling. His question is, how can he reduce the currency rate from US currency to euro risk?
So again, with that, I would say you want to look at a forward contract. If you've got any, you know, regular payments to make over a period of time. So similar with the RPP, where we can have that on a flexi rate basis, we can actually do that on a fixed rate basis as well. So you could have the exchange rates fixed for, again, you know, up to a year. And that's going to be a really powerful way to make sure that each payment is going to be the same for each currency. So, you know, your euro cost is going to be the same as your dollar cost. So that's probably the best route to go down with that.
Okay, cool. We've got Patty asking, what's a common pitfall for people buying overseas that you could share advice on?
Yeah, so again, I would say probably just, you know, not planning early enough and simply leaving it to the last minute. And all of a sudden, you know, you can be in a position where, particularly with the exchange rates, you know, if they've moved against you, all of a sudden, if you're having to find an extra £5,000-10,000 compared to what you'd originally budgeted, that's a big problem. So I would generally say with these things, you know, the earlier the better. Just get in touch with us kind of as soon as possible. Explain about your plans. We're always very, very happy to speak on the phone. We have, you know, a large team of people who are really happy to speak to clients and find out about their plans, get them through to the right people. And I would say, yeah, just the lack of forward planning is quite a big pitfall, because if, you know, it's like anything, if you leave it to the last minute, you could potentially find yourself with big problems. And again, with this sum of money, the currency rate is sometimes the thing people think about last when I would argue it's actually probably one of the first things you want to think about, because if your budgets aren't correct, then it's not going to be something you're able to do. So that would be my thoughts on it.
Okay, and you say probably one of the first things you would do. How early on would you recommend someone getting in contact? So, a year, a few months? What do you think?
Yeah, I mean, honestly, it's never too early to speak to us. We have a lot of clients where they'll sign up potentially, a year, even 2 years before their plans, and we simply touch base with them intermittently throughout that period of time. And then, of course, when you come to the time of actually looking at it, you feel hopefully wholly confident that you've got us by your side to help with that. So yeah, I would say it really is never too early. 6 months, a year, even if you're 2 years out, just drop us a quick email, and we'll make sure we're touching base with you regularly to find out sort of where you're at, and hopefully be there to help when the time comes.
Mm-hmm. This might be a similar kind of answer, but Paul's asking, as they've not yet found the property, at what point would it be prudent to commence with a forward contract?
Yeah, and again, I would say everyone's different. I have some clients who book a forward contract a year in advance, some clients who simply want to book one, as and when they found a property. I'd probably say the most common time is that offer accepted. So when my clients have an offer accepted on a property, that's when they're often calling me to get the exchange rate secured and locked in, because then they really want to know that the cost in sterling is not going to change, and they want to know that those euros are going to cost them a certain amount of pounds, and it's not going to fluctuate. So I'd say most common time is around offer accepted, but again, some people might book it beforehand if they like where the rate is, or they want to have absolute certainty over their budgets. Had a client just the other day who wanted to lock a forward contract in because she liked where the rate was. She was concerned by the downside risk, and just wanted full clarity over her budgets and to know that she had secured the euros in full. So yeah, again, everyone's different, but I'd say most commonly probably an offer accepted.
Okay, that's fab. Thank you. I think that's probably about all we've got time for. Thank you so much, Danny. Some great insight there, and I'm sure some really useful tips for all our listeners. We would strongly recommend you get in touch with Smart Currency directly to discuss your requirements in detail. And we would like to invite you to your Overseas Homes virtual event on Saturday, the 11th of November. Danny and his team, Smart Currency Exchange, will be exhibiting at the event, and it's for anyone looking to buy property in France, Spain, Portugal, Greece, Cyprus, and Italy. I think that's the one I missed. We've just shared a link if you wanted to sign up to that. It's entirely online. You can join from the comfort of your own home, and it's just like your in-person property show. So there's really it's a win-win really. Thanks again for joining, and good luck with your plans to buy overseas, and we hope to see you soon. Thanks so much, Danny.
Thank you. Cheers.